I'm doing super fantastic. Can you hear me, Terrence?
Yes, we can.
All right, I didn't have it on mute. All right, guys, great. We've been having great training so far, guys. We're gonna keep it moving. Today, since we was made aware that the W-4 estimator came up late yesterday, so we spent some hours uh, last night putting some things together so we can kind of go through that. I think a lot of the our team members been waiting for that that training. So that's what we're gonna go through. I think I have about 20 minutes. I'm gonna cover a lot, but I try to get through it so we can be on time's sake. We will probably be here after the fact if we got other questions, but we want to keep moving. Okay, guys, if my screen is showing, y'all should see me take a picture of my contact information for the office so you can reach me. I'll put some stuff in the text, okay? All right. So the topic of discussion, of course, is a 2022 W-4 and the estimator. Okay, we pride ourselves on using the estimator to help educate those who say yes to my econ. But let's talk about it. I haven't did this in a while, but I think it's important. What's the purpose of teaching the W-4? My econ teaches the W-4 so we can immediately increases somebody's cash flow, a person's cash flow, in order to help them jumpstart their personal financial success plan. And that's step one. Step one says, get that money working for you. We might make a statement that says, get a pay raise without asking your boss. But we want to get that money back into your check so you can either pay off debts, invest, or do both. And if you notice, I have that highlighted in bold from the Too Smart and the JT Financial. That is one of our I'll say unrelentlessness from the standpoint, we want you to do that. We want you to do that. My econ might say, hey, it's your money, you do what you want with it. Our upline, Mr. Hill, says, since you joined my econ with us, you just volunteered into an army. So once you volunteered to the army, so you gave us permission to tell you what you need to do to get yourself better. All right. Yes, grown folks gonna do what they want, but we highly encourage you guys, use this money, pay off your debts, invest, or do both, because you weren't doing it before, in our opinion, or so we want you to do right with it. My purpose of teaching the W-4, that's mean anybody who hears my voice, anybody part of my company who's going to use my name, Too Smart, or anybody in my econ. If you hear my voice, my reason is included, same reason my econ does, but I do it from a standpoint we're going to use facts, not hype, so everyone is protected. Okay, I hope that makes sense, guys. And here's another one. The W-4 is time sensitive. That means real time. At the time we work with someone to help them adjust that W-4, it's going to be based off what their paycheck look like. And I think we need to be clear. The W-4 is based off employees, folks who still have a job. Okay, folks who still have a job. So it's going to be based off what their paycheck looked like at the time they are using this information. They're going to be using the estimator. And it's based off how much federal income taxes are currently being withheld from the check. It's going to be based off what happens or what effect they won't have when it's done. The W-4 is taught in general. So when you're in a training like that, we can't implement everybody's situation. We can't cover everybody's different situations that's going to come across our team. So it's taught in general, but it's implemented based off specific facts of the new associate. And those facts could be what that new associate's filing status, what their current tax situation like, what is their future plans with the business. See, all that makes a valid point, so we know how to move forward. So we getting truth out there and not just misleading. And last, the new associate will need some things to complete the W-4 correctly. They're going to need their last and most recent paycheck stub. They may need their last tax return. And so my goal as I teach you guys or show you from my presentation, it may be some things that we can subvent without having a last tax return, but it's going to be some questions that new associate's going to have to provide so the W-4 is as accurate as possible. All right. Here's what I want to put up first, guys. You guys that's been around, haven't heard me in a while. Y'all remember I used to show these. So here's some things I want to show up front, guys. And these are for my new people and refresh for the old folks. These are pictures of a paycheck stub. All right. And what I've highlighted is the section that says federal income taxes. in this example, and it's okay. If you guys want to unmute real quick, because I want some feedback, make sure we're on a same page. Just make sure ain't no noise in your background. I want you guys to tell me how much taxes from the income standpoint has been withheld from this paycheck.
None.
None. Great. Great. Everybody agree. I want you guys to see that. All right. So if there's no taxes held from this person's paycheck, when that new sales should come to the table and we say, and we're here in training, we can help folks cash flow 300, 400 in a scenario, it may not apply to them because that's not their situation. Okay, let's do it again. How much taxes are taken out this person's paycheck from a W-4 standpoint? I want some feedback. Y'all go ahead and talk.
17 cents.
Now I got to highlight how much?
$97.17.
There you go. So we help this person adjust their W-4. The most we can increase their paycheck would be $97. It's more than the one that was zero, but we can help them. Now, here's the ideal. How much money is this person's check? All right. So y'all see the pattern. This is $364.84. And this is they got paid twice a month. That would be over $700 a month if they maxed out their W-4. I hope that makes sense, guys, as we listen to this training from a new standpoint and from someone who's going to help someone. We want to make these statements clear that we want to help the masses, but it also depends on that person's situation. And my economy as a whole, it's my economy. Everybody's economy is not the same. What is your situation? And let's put your situation in a different atmosphere or a different climate than it was. You might not be the same. All right. But we do want to make that clear. I hope that made a point. All right. So let's look at a W-4 real quick, guys. This is what a W-4 looks like. All right. This is the first page. All right. And the first page at the top has your personal information. You put your name and information. There's a second part right here. And we're going to break these down individually. Third part, step 3, dependents. 4, optional, other adjustments. And the last part is for you to sign it. So I went through that pretty quick because I'm going to go through it. I'm going to break them down. Here's the second page. And here's what I encourage. I encourage everyone who's new, who's been around for a while. You can get this from the website. You can get this from the internet. Just do 2022 W-4, download it. Well, you might have it in the back office, but you can get it direct from the internet. I would say download this and put it on your to-do list. Put it on your work schedule that, hey, you pick a certain time in the day when you're going to clock in and read a paragraph or two. It might take you a week. It might take you 2 weeks. But if you're planning on being a 3 to 5 year plan in my econ, so you can pick some time to educate yourself. The definition of an expert, guys, is you know more than the person that you're talking to. In that conversation, you are the expert. Our upline, Mr. Hill, says we want to build the value gap. The more you know, the more you can bring forth. You're building your value gap. So read a paragraph so you know something. Know a little bit. Read a paragraph, and then you use that. Use what you know, then work on it. Just use what you know. If you don't know the whole page, just pick one paragraph and just start finding a way to introduce that into your conversation, okay? Here's page 3, page 4, guys. All right, so I want to go over that so you can see it. All right, so here's the first part. Put your name, last name, address, city, and you pick your filing status. Of course, you got to put your social. That's what you do when you fill out the top of the W-4. Now, this W-4 can be digital and it can be paper. Some employers use paper and some employers have you signed in through the internet, what I call digital. All right. But here's what I do want to bring out. I want to make this, I want to point this out. Complete steps 2 to 4, only if they apply to you. Otherwise, skip to step 5. See page 2 for more information on each step, or who can claim exemptions from withholdings when using the estimator and privacy. All right. So step 2. This is what we want to use, or this is the next part. Complete this step if you hold more than one job at a time or married, filing joint, and your spouse also work. The correct amount of withholding depends on income earned from all these jobs. Do only one of the following. A becomes before B, B comes before C. It says use the estimator for the most accurate withholding for this step. Use the estimator. So we're going to stop right there and use that as the law. We're going to use the estimator. And for those that don't know, using the paper alone, without using the estimator, it will produce inaccurate numbers. The form is too general based off all the new laws that have been put in place. It's too general to get the most accurate number. All right. So it says if your income is 2,000 or less, single, 4,000 or less, married, filing joint, use this scenario. All right. If you got a number qualifying depending on the age of 17, multiply that by 2,000. All the rest, other dependents, multiply by 5, and it puts a whole number there. Just using the form will be incorrect. So we're just showing you the form so we know when something doesn't seem right. I want you to understand what the form would do. So let's talk about it. If we put a number right here, if we put a number, that is going to decrease your withholdings. So if a number shows up there, that's going to decrease your withholdings. When you decrease your withholdings, that means you're going to put more money back in your check. If you put a number right here, that's going to decrease your withholdings. That means you're going to put more numbers into your check. And just for argument's sake, guys, these two spaces are just placeholders. All right. The true number that actually affects your withholding is when it comes right here in number 3. They're basically adding these two up and putting a number here. Now, as we move forward in the training, guys, you're going to notice that a number does not have to be placed here. The estimator will not have to put a number here, and it will put a number right here. All right. So with that said, I'm teaching you now there to handle some objections. We had some team members that filled out this information, took it to their employer because they had to do the paper. And because they didn't have any numbers here, the employer felt that it was wrong. So we can't help ignorance, but we do know if that happens, we just going to show you how to circumvent it. So we're going to appease them if you can't take it above their head and we ain't got the time to teach them. So we're going to show you how to circumvent that if that happens for you. Okay. So I'm just showing you what happens to the form. Step 4 says this way you can put some numbers for other jobs. If you want other income sources, you have the ability to kind of take care of those taxes here. Deductions, this is your standard deduction. You want to put some here, extra withholdings, says exactly that. So if we put a number right there, we're going to increase our taxes. That means decrease our paycheck. If we put a number right here, it's going to decrease our withholdings, increasing our paycheck. And the last one, if we put a number that says extra withholdings, we are going to increase our federal withholdings and decrease our paycheck. And it's going to be recorded, guys. And I know I went through this. So just take pieces of what I'm teaching you. Don't try to digest it all. So we're going to keep coming. That means you got to keep coming back to training. Keep coming looking at the videos, because this is just not you seen it once and you're going to learn it. Okay. So the last part, you sign it. Okay. So when we're talking about the W-4, guys, we're giving you a snapshot of what you can do in business once we start giving you some adjustments. So we're going to come back to these pages right here. I'm just going to throw it up here, but we're going to come back to it. I'm going to show you my point. Just take a snapshot real quick, but we're going to come back to it. Okay. Here's my little cheat sheet as far as my bit link to get to the app, but I'm going to show you how to get to the app. What I want everybody to do right now, I definitely want you to take a picture of this. This is going to be our example. Anytime I'm doing a W-4, and hopefully if anybody else is doing a W-4 from a training standpoint, we want to show an example of what somebody's situation looks like so we can do a fairly good job of training. We want to show you, here's this person's scenario, because the W-4 only works with information that's been put in specifically to the new associate. All right, so everybody got the picture. Great. We're gonna move forward. Okay. All right, so we're gonna keep moving forward. Let me do this for you real quick. We're gonna skip out the training. I'm gonna slide it back over. So what I'm gonna do now, guys, I'm actually gonna slide over, and I hope my screen is still sharing. Jordan, Tammy, let me know if y'all see the screen.
I can see it.
All right, you can see it. All right, let me make sure. Okay. All right, cool there. All right. So I'm reloading it because I've already had it in there, but I want to go ahead and do it so you guys can see it real time. Okay. This is the estimator. This is what the estimator looks like. Okay. So first you start off about you. We're talking about you. Okay. So it's going to ask, what is your filing status? Y'all remember I told you it's based off that new associate's situation. So for my example, and I'm gonna slide my example in and out so you guys can see it. For my example, they are married filing joint. This is Joseph and Mary Work. All right, so they're married filing joint. So we're gonna say married filing joint. Now you just think about your own scenario for you, but from a training standpoint, this is the example I'm using. Okay, do you or will you or your spouse have a job that regularly withholds federal income taxes? I hope that's clear. We're talking about the W-4 at this particular time. So W-4 is related to individual who still works a job. All right. So we're going to say yes. Then they got other questions. Do any of these questions apply? I will be 65 or older. My spouse will be 65. I'm blind. My spouse is blind. I am claimed as a dependent, or I plan to claim dependents on my tax return. So for my example, we're going to choose the last one. Because we didn't see, if you didn't take a picture, I'll slide it back over. They got 3 kids, 7, 9, and 17. Okay. All right. Keep cooking. All right. We're going to hit next, guys. Now, income and withholding. Enter information for each job you will earn from this year. Okay. This means the household. So if the husband and the wife are working, that means there will be 2 jobs. Okay. My first income, my second income. And that can be, and only difference is you guys got to remember, whoever the first person that you put in from an income, that's their income. The second income is the spouse. All right. If there were one of the spouses worked 2 jobs and the other spouse worked 1, then we'll change that to 3. Then the first person that got 2 jobs will be first and second, and the spouse will be third. I hope we caught that. So let's go back, and we're gonna choose salary just for training. All right, we're gonna use salary. Most folks, if you get paid hourly, we can do that. So we just approach it from a salary standpoint to make it simple. Okay. Then you got another question. Select which describes when you or your spouse earn income. We always gonna say the whole year. Okay. Just for argument's sake, use it for the whole year. We don't want to complicate it. Just make it that we're working for the whole year. Okay. Next one, choose your pay cycle. How frequently are you paid? This is an important part, guys, when you're talking to a new associate and working with them. They need to know when they're getting paid. If they don't know, which may happen, their check stub should tell them. Their check stub should tell them pay period start and finish, and then pay date. And based off the time frame in between start and finish, you should have an idea where we can come up how often they get paid. All right. If it was from the 1st and through the 7th, that's 7 days, and they got paid the 14th, we can assume from that standpoint they get paid every week. That's just, but right now for my example, we're gonna say twice a month, because weekly is different than every 2 weeks. Every 2 weeks is different than twice a month. And of course, everybody who get paid once a month knows it's different than all 3 of those. Okay. So every 2 weeks, guys, is roughly around about 27, 26 paychecks. Twice a month is only 24. So there is a difference. And weekly can be up to 50, 51, maybe 52 if they worked every week of the year. Usually they take a 2-week vacation. So my example, they get paid twice a month. All right. So pay date in, the most recent pay date in, we're going to use January 31st, 2022. How you get that date? You get it from the check stub. I'll put it in place because I'm doing the training. All right. Their paycheck every week, every pay cycle is $1,875. So let me slide it back over, guys, so y'all can make sure we're keeping on track. Joseph get paid $45,000 a year, and based off that math, he gets $1,875 every pay period, twice a month. Okay. Taxes withheld per check is $187. So year to date would be $3,750. So we got to put that in there. And here's what I like about the calculator, guys. If we put it in there, you see I've already got it typed, it will tell you what that person's salary would be based off what you said. And so based off information about it, it looks like your spouse income, you or your spouse income is $45,000 a year. So that tells me we're pretty accurate. based off my example. So I'm gonna say yes. If it's something different and that number is different than what your new associate thinks they make, then we got something to work on. But this just keeps you in what I call checks and balances. All right. Enter the federal taxes paid per pay period. You need to know that. It's gonna be hard to know that without the check stub. Year to date, 375. All right. Come down. Are we going to, do we contribute to any 401k, HSA? For the training purposes, we're not going to include none of that. We want to make the training simple until we have to go into those areas. Second income. So we're going to go real quick. Do the spouse all year, every 2 weeks, make it simple for the training. Pay period going to end the same, but in most cases, they do not, but just for training, we're doing it. Wages per pay period, $1,250. Wages year to date, $2,500, and she gets paid $30. So that matches. We're gonna say yes. Federal taxes, $125. Year to date, $250. Guys, I hope you're catching on. All right. Don't have any other income sources we're gonna discuss as far as this training, but there are other stuff that can come up. Let's hit next, guys. All right. Adjustment of income. Right now, we don't have any adjustments. We're not gonna do any adjustments to this person's income. So let's hit next. All right. Deductions. That person, when they bring their taxes to you, if they don't know for sure, they should be answer that question. That's already going to say you qualify for the standard deduction of $25,900. That is the standard deduction for married filing joint for 2022. Do you itemize? Some people may or may not know if they do. You're the expert. You might help them, encourage them. And hey, if you itemize, that means you got other things. If not, look at your taxes. And your taxes will say if they itemize. All right. And just for teaching you guys, let's click on itemization so you would know moving forward. Itemization means you can deduct these things on your taxes, and it's higher than your standard. You might have these things, but if it's not higher than your standard, then you do not itemize. Itemization includes medical and dental expenses. And if you got any questions, guys, do this. Hit the question mark so it can explain it to you. Play with the estimator so you can build the value gap. Any medical expenses over 7.5% of your income. Over 7.5% of your adjusted gross income. Okay? So let's just use a number. If it's 100,000, if you got medical expenses over 7,500, then that amount of medical expenses over that amount, you can start adding to your itemization. Tax that you paid for the state. Qualified interest that you paid. Most of that is mortgage. Taxes in most cases is mortgage, real estate taxes, and state taxes. Charity, contributions, normally tithe and offering, casual losses, and other itemized deductions. So I just showed y'all that's what itemized deductions are. So for my example, we're just going to use standard, and we're going to keep it moving. All right, child tax credit. Guys, this is where the kids come into play. Y'all remember my example? I had a child that was 7 years old. Then you add another one, 9 years old, and I add one more, 17. Okay, I didn't mention anything about child dependent care, so we're not going to use it. Earned income credit. All right, here's another tool I'm teaching you guys. If you want to know what earned income credit is, you can hit the little question mark and it will tell you. Okay, you hit the question mark and it will tell you, but we'll go through that later in the training, so I want to get through. All right, let's do this. And so if they do earn income credit, they should be able to see it on their taxes. But if they don't see it on their taxes, here's a little cheat sheet I want to give you guys. Take a picture. This is my little cheat sheet right here, my little Bentley link for earned income credit calculator. All right, so I'll just copy that. Hopefully it works. All right, I'm gonna come up here, enter a new tab, and hit paste. Boom, and it should come up my good calculator. So here's a little cheat sheet, guys, to show you if your person is going to qualify for earned income credit. So they're married filing joint, they have 3 children, and their income is $75,000. It's $75,000. If you don't remember, let me slide it back over so you can show. 45 plus 30 is 75,000. Okay. And we're going to come down and hit calculate. If we hit calculate and it comes up with zero amount, that means they do not qualify for earned income credit. So for your calculator, we put nothing there. I hope that that's a pretty good tool, guys, for you to use. Okay. So we're not going to put anything there. So we're going to keep going. All right. And I will stop here for a minute right here that says business. We're not putting any business deductions from my econ right here. We're not going to put anything right here because that's not where it goes. I'll show you where it goes when we finish. All right. So we're going to hit next. So at this point, guys, we are at the result screen. We're at the result screens. And based off of this, they said expected withholding is $7,000 from their paycheck for the year. Their tax obligation will be only $984. So they should get a refund of about $6,193. All right. And before I adjust the refund, let me scroll down. I want you guys to see this. I'm going to scroll down and look at income withholding. They've already paid $600 in taxes. All right. They're going to continue. If they continue, their total will be 7,173. I mean, 77. So what we want to teach someone is, if you're going, do you want to wait all year to get this money, or do you want to put this money back into your scenario? We believe that most folks want to take this money and put it back in their scenario. So we're going to take it and we're going to go down to 900. I'm using 900 as a number to say close that we can cover their tax obligation. We can go a little lower, then we'll go a little lower. But right now, based off me going back and forth, 900. We can't go no lower than 6. So 900, because we already sent that in. So we'll use 900. All right. Might not be zeroed out, but 900. So that means we're going to get the difference. So that's going to be close to about, let's just say $5,000 that we're going to get back. So we're going to show you what's going to increase that check. So based off us putting that refund amount at 900, that means to get this desired refund, you would need $39 withheld from your check for $148 less. So that means they're going to get $148 back in that check. So that's going to increase their increase their paycheck about $296 a month, $148 paycheck. Okay. So we're going to click on how to adjust. When you click on how to adjust, it's going to tell you verbally, and it's also going to print out a form. All right. So we click this form, it's going to pop up as a PDF, guys. All right. Let's pop it up. You're going to see it, and I'll open it. That's how mine do it. And it's going to print out a PDF. And the PDF is not going to come up with your name because they don't know who you are. Only thing that's going to be populated is that line right there. You see it don't have anything right there because it wasn't based off the children. It was based off the adjustments based off what we put into the calculator. All right. So you got to fill out the rest and then print it out. So that's what the W-4 looks like. So my question, what we suggest is, if you're getting that money back in your check now, what are you going to do with it? Pay off debts, invest, or both. That's what we suggest. That's what we suggest. So now you got that money. Now, let's add some my econ teaching, and we're going to wrap this up, guys. Let's go back to adjustments. All right. Under adjustments, we got all these things: student loans, education expenses, all these things that we can do. But the thing that pertains to business, we're going to use this category: certain business credit for reserves. All right. That's the best area we can put it. So that's what we're going to use. Okay. So if we're filling out this W-4 in the beginning, no one has completed business for the year because the year is not over. So we're going to slide back over what I showed you. Those common tax deductions. Y'all remember these? I said I'll go back and bring them to you. This is what you can do. This is what you have the potential to do. So we're going to be asking a new associate. I'm asking you guys now that haven't done your W-4. Hey, you got the ability to write off 58.5 cents a mile if you conduct business. So we're going to use an estimate. How many miles you put on your car? My example, they told me they do 15,000 miles a year in their car. We're going to say at 58 cents a mile, they can write off 8,775 if they follow through. But that's just an estimate. All right. Communications, they got a cell phone bill that's $200 a month. Have the conversations business related. So that's $2,400 a year. $1,200 deduction. Meals. They're gonna say they spend $2,000 in meals a year. We're gonna give them $1,000. They can take $2,000 because there is a way to do 100% in business meals. Travel. They say they spend $4,000 in travel now. Okay, we can probably drop that down to $2,000 using the membership. But now, since that travel can be business related, we're gonna give them credit for that. Paying your child $12,950. We don't pay them the whole thing. Pay them 10. So these are things you can do in business. So when we talk about W-4, we want the new associate to say, hey, I'm committed. This is what I'm planning on doing. If you tell me that's what you're planning on doing, then we're comfortable of putting that on your W-4. All right. So let's just use a couple examples, guys. All right. We got the mileage. I'm just going to use 8,000 because you can add up to 4 different columns. All right. We got the communication. We're going to use 1,200. Okay. We got the travel. We're going to use 4,000. And we got paying the kids. And they got 3, 4-year-old, pretty small. But let's say we're going to pay them all 5,000 instead of 10. Y'all see what I just did? All right. So that's 28,000 in adjustments. They're planning on being a product of the product, and they're planning on working the business. Let's see what happens to the results on doing that. Now they have no tax liability. Their refund is about $9,500. They're going to get about $2,400 in estimated refundable credits because of child tax credit. So we're going to slide this scale down to about 2,000. No, I think I had to do it like 37. I want to see when the results change. There we go. 0 withholdings. They won't get 187 back in their check if they commit to a refund of 337. That's what we're looking for. Click the adjustment, see the form, and now the form is going to change. You got 1910 on your credit, guys. The business just helped you bring all 187 back. The chance of you on is going to be slim because we followed the procedures. My last little example, guys, and I promise you, I'm closing like a Baptist preacher. Let's go back and see, can we really put some things in place? We can give them retirement. We can put some money in place. We can do a lot of things. I'm just going to show you this one step so we can keep it moving. Let's go back to adjustments. Let's say they maxed out. We didn't put the business price. They're paying $50 a month, $35 a month. So let's make this 8,400. Let's go over here. Let's just say they paid the 2 older kids $10,000 a piece and paid the little one $5,000, $25,000. Is that realistic? Yes, it is. Can they do it? Yes, if they do. So that's $3,800 in adjustments. Let's hit next. Let's go over here to results. Let's see what happens. They're still getting a $9,000 refund, but they zeroing out their taxes. But here's a point I want y'all to see real quick. If they kept all that money, their taxable income, guys, is $36,000. We wrote off 38. Let's go back to this calculator right here. They got 3 children, $38,600. Hit calculate. Now they're gonna get another $4,000 in refund that doesn't show up on the calculator because the calculator only adjusts based off what's coming out your check. So they can get all that $9,000 back, put it into a retirement account, get credit for it, and still get a $3,000 refund. I know I went through it pretty quick, guys. I hope you learned something. If you got any questions, you may do, but we want to keep it right on time. So Terrence, I'm gonna turn it back over to you. Let me know if we got time for questions.
We're gonna hold